Hi everyone, within this video I'll be reviewing and exploring a trade that I have taken earlier in the week on gold. The trade started off as this. I came to the charts at 6:30 AM as I do a majority of the days GMT. When I got to the charts I marked off the previous daily high and the previous daily low. The reason for doing this is because I see them as strong confluence areas, strong liquidity resting here. There's a lot of money there, and I trade quite often reversals from these two areas. So if price was to come all the way down here, I'd expect a breach of this liquidity and then a run off back up to the top side liquidity, and then vice versa. If we get a breach of the top side liquidity, I'd expect a reversal all the way back down to yesterday's low. So as it stands, it's 6:30 AM. I've just come to the charts, marked off my daily highs, daily low, which are the areas only that I'll enter a trade. And then I can see that through the Asian session, there's been it's just been ranging for the past 6 or 7 hours, something like that. As I said, the way I like to trade is I am prepared for price to come and breach, the term I used, breach this high here, the previous daily high. And then once price broke above there, collected the buy side liquidity, we had a sharp reversal all the way back down, which engulfed the previous candle. This in turn is our displacement, or our retracement, or our indication of where the market would like to go. We just follow the market plan. We see what blueprints they lay out for us in the candles, and then we just execute basically. So right now we have taken the buy side liquidity from yesterday with a sharp impulsive move back down. So it is as simple as waiting for a trade. So again, the next candle pushed all the way up, broke back outside of the level that we had. It didn't quite have the momentum to reach all the way up to the top, and then the candle closed beneath the level or back in the range, which again signifies that we should be going down. Further signifies. So I'd like to see a push up now. So this would be my position here. Stops above the previous candle structure. We'll incorporate a couple of pips due to the spread. Target the last form of liquidity, which is this wick here. It's a 4.5 to 1 risk to reward, and it's a simple. So we are now in the trade. Support should form. Right now, if this is the level here that I'm looking for, if this level gets touched, we will put our stops to break even. As always, it is our first point of liquidity, or our first TP, if you would say. It's a strong bearish candle, very strong. Again, beautiful candle. We should get a tap into the level. So we've got a tap into the level now. Theoretically, this trade is now risk-free. We have not taken any partials, but we also cannot lose any money. So we're just going to let it play, carry on seeing what it's doing. We seem to be holding the first level. There's a lot of wicks and then a bit of bullish pressure upwards, but we are still locked in at break even, guys. We can't lose any money on this trade. Big push up. Hopefully this is just a retracement where we could get a second entry. We could have got a second entry there. You can even enter again as it breaks this low here, but I'm happy with the first trade and I don't want to risk any of the profits that I'm going to be making. So that's beautiful. Almost tapped our second level. So we broke through our second level here. My stops would be in profit above this little overhang here, our intermediate swing high. And then I'd probably take some profits at this level here, with full profits being taken at the last low. And just like that, we smash another trade. It closes back within the range, so we'd expect a little bit of bullish pressure. So we get a small bit of bullish pressure, and then this again would be a perfect entry. You've got your imbalance in the market, you've got your displacement down showing overall direction, you've got your liquidity breach, This could be your second entry into this. Again, target the same, and then let your trade run. Just like that, straight through. Just out of curiosity, I would like to see how far the trade would have gone. I'd like to see if yesterday's low would have been taken out or if I would have been taken out. It seems to be riding a bit. Obviously this is well out of my zone. So I'd have been stopped break even on both trades basically. That is fine. It happens. I'm happy with the profit that I got. Thank you for watching this trading recap video on gold. Be sure to check out my page for many more. Hope you enjoyed. Take care. Goodbye.